Management Office has released a revised bond issuance calendar for the third quarter of this year. This indicates plans to offer 480 billion naira in the last two auctions of the quarter across newly issued 2030 and 2032 maturities. Traders at Axis Bank expect weak sentiments to persist as the markets react to the anticipated increase in supply from the DMO. Odinaka Linus-Nwokonkwo, Treasury Team Member at Axis Bank, joins me now for this conversation. Thank you so much for your time today, Odinaka. And let's get a sense of how the market is reacting and digesting this news about this calendar.
So, hi, nice to meet you. So what we've seen is a bearish sentiment across the bond desk. Especially, we see the 2029s, the 31s and 33s. There's a bit of bearish sentiment. If you look at the Minister of Finance, the comment he mentioned about the 4 trillion sum owed to Genco, so that sparked that bearish move. And today we're seeing quotes almost at 17.70 on the offer. Yesterday we closed at around 17.74, especially on the medium tenured instruments. And also on the 29th, we are not seeing any activity currently this morning, but most of the activities are centered around 33s, with a two-way around 17.95, 17.70.
Because now you're looking at this very quiet. You said you expect the weak sentiments to continue to persist. Yeah, you know, first, what would you say is driving this pessimism on one hand? And we're also seeing some sell interest in the February 2031 and also the June 2032 papers here. Would you say it's purely a supply story playing out here, or are there other pressures at play?
Yeah, so I remember when we moved from 20% to around 15.5, it was a case of low supply of instruments and also DMO stance of not being able to borrow aggressively again. So now there's a news of 4 trillion with the Minister of Finance saying there's a phased plan by the DMO to borrow, and this has also sparked some sentiment about improved supply, and this is causing that bearish move in terms of securities. And most of the impacts you will see is based on the ones that are highly liquid and most in supply, which are the 2033s and 31s. The 32s are a bit low in supply, and also the 29s, there's a bit of weak appetite for that. But now that is off the run, we kind of expect some demand on also the 2029s going forward.
All right, but liquidity has also been quite a challenge when you look at how things have played out so far this week. I'd love to get your take on what we can expect the rest of the third quarter in terms of maturities.
When you look at liquidity, the market is currently in a repo, I think 35 billion, which is why you see the OPR and overnight rates hovering around 32.5%. However, I remember that we've seen auctions, especially settlements from Central Bank. CBN has been intervening in that space in terms of FX, so that has also impacted liquidity. I mean, going forward, we still expect some coupons coming in, and then FAC inflows, nothing out of the ordinary in terms of expected inflows as at the moment, just the regular business as usual.
We're also expecting inflation figures to come in right about today, but I'd love to get your projections on how you're pricing that in.
Yeah, so when you look at inflation, I mean, one can argue that last month, most things, everything was a bit stable. We didn't see much spike in FX. Oil price a bit fairly stable. So those two things that actually impact our inflation have been a bit stable. When we look at the food output, the food inflation, I mean, I don't see any strong spike in that. So I will still maintain either it hovers around the same levels, 22%, or it kind of declines slightly today. But we see what it comes out to just a few hours.
All right, the interesting times, but thank you so much for your time today. Odinaka Linus-Nwokonkwo, the Treasury Team Member at Axis Bank.